This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Beginning today's show is K-State Agriculture Policy Specialist Jenny Ifft with a heads up on crop insurance-related factors. There are many things producers should look into before deciding on a policy. Drew Ricketts, K-State Wildlife Specialist, continues today's show by discussing the North American model for conservation and science information about baiting and feeding. K-State Dairy Specialist Mike Brouk rounds out the show by reviewing recent data from the Central Milk Marketing Administrator that shows growth in several areas in the Midwest region. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Tuesday show with some information about crop insurance. And then to talk about it, we have K-State Agriculture Policy Specialist and Flinchbaugh Agriculture Policy Chair, Jenny Ifft. Jenny, thanks for joining us today.
Great to be here.
So talking about crop insurance, we've entered the month now where there are some deadlines for it.
Right. We have some deadlines for the upcoming year. So we're already talking about crop year 2024, and I haven't even started harvest in a lot of places. But the deadlines, this happens every year, the end of September for winter wheat, and also a relatively new product called margin protection for corn and soybeans.
Which we'll talk some more about margin protection, and that deadline is September 30th. And as we're talking about our crops, first talking about winter wheat.
So there's not too many changes for winter wheat policies this year. You know, the one thing that does change every year is the price, which is part of the crop insurance guarantee. You know, your guarantee is basically your expected revenue. So what are your expected prices, your pre-planning futures price, and a producer's expected yield or production history. So we're still in a period of price discovery for wheat right now. That's going to go on about another 2 weeks. But what we're looking at right now for winter wheat harvest futures is about $7.41 a bushel. And so that's a decline from previous years, but I think it's important to put it in context. So if you look back at 2023, we started out at $8.79 per bushel. Harvest price was a little lower. It was about $8.20 a bushel. 2022 is very different. We started out at $7.08 a bushel, which is lower than the $7.41 we're looking at right now. Started out at $7.08, but we went up to almost $11 for that harvest price. And then if you go back to 2021, $4.90 a bushel at planting and $6.21 at harvest. So, you know, these markets have been moving a lot. And so I guess the big question, I think, now, and not just for wheat, is we've had a couple of years where prices have been higher at harvest. Is that going to shift? Are we looking at a period of declining prices overall? You know, that's based on the market, so there's a degree of speculation there, but do producers want to protect themselves against that?
And something to think about with risk management, which we'll talk about here shortly. But first, kind of coming back to some of those different practices.
Producers have different sort of practices they can enroll their crops under for crop insurance. Those practices might have different yields, say irrigated and non-irrigated. So your guarantee is going to look different. The irrigated crops tend to have higher yields. For wheat, the two big ones are summer fallow and continuous. Right now, producers that use these practices, very typical, have to combine them. For some producers, it's fine. For some producers, it's a problem. The yields are very different, so it doesn't provide a very useful guarantee or doesn't provide very useful risk management. It's still going to be the case for this crop year that these have to be combined, but the wheat growers have been working on this with their membership, and they've been working with Senator Marshall, and they're looking to get a proposal in the Farm Bill. So producers are allowed to separate summer fallow and continuous. So we don't have a Farm Bill yet. That hasn't happened. I'd say it's probably pretty likely that if you look to the next crop year, that might get sorted out, but there's not going to be anything for this year yet. And this is something that has to go through the legislative process. It doesn't always happen as quickly as you'd like.
And thinking of insurance, something that is incorporated in that is premiums.
And probably if you just look at the premiums per acre this year, unless the ratings have changed, all else held constant, they should be a little lower because prices are a little lower. If your guarantee is lower than the previous year, it's going to cost less to insure. Also, there's an implied volatility factor. So the price of insurance takes into account how volatile the markets are. They're still volatile, but last year was really volatile. So So premiums may be a little lower. Again, that's going to match that lower guarantee. Now, I did get a look at some of the winter wheat budgets for 2024, preliminary data from my colleagues Dan O'Brien and Greg Eibendal. And it looks like there is an opportunity for profitability. Again, these are average farms, but I did get a look at their numbers. And it looks like there's going to be positive returns over variable expenses in most of the state. But they are projecting some negative returns in some places once you take into account fixed expenses like rent and machinery. Again, that's something that looks different everywhere, but certainly an indication there could be tight profit margins for producers in some parts of the state.
Then moving on, Jenny, to talking about the high coverage policy.
Right. So most producers in Kansas now are buying a 75% coverage level revenue protection policy. There is an option to buy a higher level of coverage to cover a higher share of your expected revenue. And this is through what I call high coverage policies, supplemental coverage option, enhanced coverage option. And these basically allow you to ensure what would be your profit margins. So typically the 75% guarantee, that roughly corresponds to the producer's expenses. So being able to repay your expenses, do you want to ensure that profit margin? The catch is, though, that profit margin is a lot riskier to insure, so it's going to be a lot more costly. So it's a trade-off a producer has to take into account if they want to do that. But that's really one of my 3 points with these when you think about high coverage policies. And I've talked about them before. There's resources on AgManager. But they're going to be. It's more risky to insure your profit margins. They're going to cost more. Producer needs to have a long-run perspective, and it's a county-based product. So we talked about the profit margin. They are going to cost more. It's important to have a long-run perspective. You're going to pay higher premiums. You should get back those premiums and indemnities in the long run, but you can go a couple of years without. So really you have to have a long-run perspective if you want to look at these. Last point, these are county-based. They have a county-based yield trigger. It might not always match what happens on an individual farm. The producer needs to be comfortable with that. They might also want to look at the relationship between their yields and the county-level yields.
Jenny, something you mentioned when we started this was margin protection. And so could you share a little bit about what is margin protection?
Right. So there's a lot that's new with these high coverage policies, a lot of new things a producer has to consider. Margin protection is also a high coverage policy. So all those 3 points, you have to consider those plus more. What margin protection, it's a county-based product. You can go up to 95% coverage level. Instead of guaranteeing revenue, it guarantees a profit margin, or say a gross profit margin. So it's your expected revenue minus typical expenses for that county. So one way to think, it's like a high coverage policy, but there's a September 30th deadline. So price discovery is happening right now. So the prices that are for that crop insurance guarantee are being collected at the same price discovery period for winter wheat. So we'll know for sure by September, whereas for revenue protection policies, that happens later in February. So it could have implications for how producers managing price risk. When do they want to hedge? It also takes into account some changes in expenses. So nitrogen, phosphorus, diesel, and interest rates are all counted in how crop insurance payouts can be triggered there. It might not match what an individual producer does in terms of purchasing those expenses and the timing. It's something you have to consider if you're interested in a policy. So, a lot of things to consider there. There's some aspects of it other than the high coverage part. It's that, that early price discovery, that, covering some expenses risk that some producers may be interested in it. The big change for 2024 is now available in all counties for corn and soybeans.
A lot of things happening and a lot of things coming into crop insurance. Mm-hmm. And if people want to find out more information or maybe read a little bit more about this, where could they do that?
We post updates on margin protection on AgManager. And on the wheat side, we've updated our crop insurance maps on AgManager.info. We have some different tools, especially if producers want to get that county level information. Always talk to your crop insurance early. That's generally good advice. I would say for margin protection, it's really important to sit down earlier if you haven't used it before, because there's a lot of moving parts. It doesn't work. It works in some ways, in a lot of ways, it doesn't work like typical policies, but there's also implications for how you manage your hedging or marketing strategy that need to be taken into account.
Crop insurance is just one portion that producers can take into account when thinking about how to mitigate a little bit of risk.
Yep, it's one tool that's out there to provide some uncertainty in a very uncertain world right now, with commodity markets especially.
And Jenny, as we're speaking about 2024, and so what do the profit margins look like for that year compared to what's been in the previous years?
Well, I'd like to use corn as an example. You can get margin protection for corn and soybeans. So the profit margins are a little bit lower than last year. They're still positive. It's best to look at them in relative terms, I would say, instead of absolute terms. But they are positive, and they're still positive. They have gone down a little bit. That's because both prices and expenses have gone down. So if you look last year, corn was $6.11 to set those margin protection guarantees. This year, it's $5.08. So corn looks like it could be at least $1 lower. Expenses have gone down quite a bit as well, but you're still looking at relatively lower profits per acre. But, I think I looked at a policy for Nemaha County for non-irrigated corn, and it's, $438 an acre, down from $496 from last year. So, still a lot of room for a producer to make money there, just less than last year. Costs are down substantially as well. So there's some relief, but this is how it still turns out right now.
Jenny, I appreciate you taking the time to join us today and give us a little bit of a heads up on some crop insurance related information.
Happy to help.
That was K-State Agriculture Policy Specialist and Flinchball Agriculture Policy Chair, Jenny Ifft. You can find information that she shared on AgManager.info, and I will link that in today's show notes, which you can find on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead. You're tuned back into Agriculture Today, and we continue our Tuesday show now with information from the Wildlife Department. And this week, we're joined by K-State Wildlife Specialist Drew Ricketts. Drew, thanks for joining us today.
Yeah, thanks for having me back, Shelby.
Drew, today wanting to talk about baiting and feeding, and first mentioning the North American model for conservation.
Yeah, that's right. So wildlife management in North America is very different than it is on any other continent. Historically, in most places, wildlife or access to wildlife has been limited to the elite, to the kings and royalty and those sorts of things. And when the colonists came to North America, wildlife was an important resource. And we have some very early legislation going back to even pre-United States, not legislation, but court decisions that deem that wildlife is a public trust, which means that wildlife is held as a resource that should be available to all people and that is managed with the interests of our citizens as a whole in mind.
And that public trust is one of the many principles that go along with this model.
It is, yeah. So the North American model is composed of 7 principles. We don't have to cover all those, but I thought we'd hit on at least 3 today that are important for the topic that we'll hit on in probably the second segment.
For public trust, creating an equal opportunity for anyone to hunt then in America.
That's right. So if we think about our management agencies, we have federal agencies that set regulations for species that cross borders or species that have such a small population that species' existence may be contingent upon the population that's in one state. For most species, though, we have a state wildlife agency for a state that is charged with managing that resource with the public in mind. Another important tenet of the North American model of conservation is that wildlife is allocated according to democratic rule of law. And the way that plays out for most state agencies is our elected officials appoint members of a commission, and then that commission votes on any regulation changes or new regulations that are proposed by a state wildlife agency. They receive input from the general public, and they act as sort of a liaison between our residents or constituents and the regulations that are enacted to manage wildlife in that state.
And then one other principle that you wanted to bring up, Drew, that you find very important is that wildlife management is based on science.
It is. So wildlife management should be based on science. That's not always the case. In any time we have democracy and folks are voting or there is a political influence in what's done, sometimes public opinion wins out over science. But the way it's supposed to work is that science is the basis for the regulations that we create for managing wildlife populations.
And something to mention then is that a lot of these principles and a lot of things we're going to talk about, there's not the purpose to limit effectiveness or limit outfitters.
That's exactly right. We're kind of leading into talking about this broad topic of baiting and feeding of wildlife that is being discussed now because of some regulation changes or maybe even stuff down the road that could or could not be coming. And so specifically thinking about wildlife and parks and their concern around baiting and feeding, there has been some misinformation out there that is indicating that our state agency is wanting to limit the effectiveness of outfitters or even limit outfitting in general, and that's definitely not the case.
And as we're talking about this, specifically talking about Kansas, not our surrounding states.
That's right. Many states that surround Kansas already have either complete or partial bans on feeding wildlife, especially feeding wildlife for the purpose of hunting. But today we're specifically talking about the North American model, some of its tenets, and how that applies to baiting and feeding, and then some information about baiting and feeding that is coming up.
And science, Drew, something important to you when we're talking about wildlife management and specifically now looking at that baiting and feeding. And so what are a few concerns that you just want to remind people with this?
Sure. We've touched on several of these things, but I just want to remind folks that one of the main things about science or the science of feeding wildlife is there's very little scientific evidence that there's actually benefit to the animals. The main role of putting a feeder out, and that's what we're talking about. We're not talking about creating food plots. We're talking specifically about putting feeders out. There's very little evidence that ever is good for the wildlife that we're putting those feeders out for. Some of the concerns are that we can increase concentrations of wildlife to very high rates. We're increasing local densities to the point where we can see increased rates of disease spread because contact rates are increased. We can see damage to habitat near feeders. We also often see increased property damage near feeders. And then a big concern that, a lot of times when folks are thinking about this, we think about feeding deer. But lots and lots of critters are eating that feed. Up to 80% of the feed that is put out for wildlife is often consumed by non-target species. That can lead to increased predation rates because we see increased concentrations of predators around feeders. It can also lead to increased predation rates potentially because it might lead to higher reproductive success among some of those critters like raccoons and opossums and those sorts of things. We also can see increased rates of toxins that are produced in the feeds that we put out that can affect other animals. So specifically there, we're thinking about aflatoxin, which is a toxin that's produced by the fungus Aspergillus, and it likes to grow on grain. So we think about this a lot with corn. And when the temperature is above 60 degrees and we have corn with some moisture in it, we often see aflatoxins exceeding the rate that could be toxic, or at least reaching the rate that could be toxic to birds like turkeys, quail, and pheasants in a corn pile within a week.
Drew, so making sure we're not feeding unintended wildlife, but then also hoping to make sure our game birds are safe for the future.
That's right. Yep. We're trying to think about all the potential impacts that baiting and feeding can have, and it's not necessarily trying to think about it is not the correct term. There are concerns about all of these things, and so we're starting to talk about them a lot more.
And Drew, you mentioned food plots, and just want to pull that one out real fast once again, that is not as big of concern as baiting and feeding.
It isn't. When we're thinking about increased contact rates and those sorts of things that lead to high rates of disease spread, that a food plot is spread out across a much larger area than a feeder is. And so we don't see as high densities and those sorts of things.
Talking about all of this because some upcoming meetings that people could attend.
That's right. There's a lot of buzz around this topic right now because there was a recent information session at a commission meeting where several of our wildlife and parks biologists and some outside scientists presented information to our commissioners about the concerns around baiting and feeding of wildlife. I want to reinforce that there is currently no planned vote to try and restrict baiting and feeding on private land in the state of Kansas. It is currently illegal on public land. Where Wildlife and Parks is heading with this is they want to make the scientific information that they're basing their sort of position on this to the public. And they also want to provide the opportunity for members of the public to ask questions and receive answers directly from the agency. K-State is going to be facilitating those meetings, specifically K-State Research and Extension. And the first one of those is coming up on September 21st. It's going to be at 6:30 p.m., and it'll be on K-State's campus in Town Hall, which is room 114 in the Leadership Studies building.
Once again, mentioning something in that meeting, there's going to be time for people to ask questions, and anyone is welcome to attend.
That's exactly right. So it's open to the public. The first part of the meeting will be Wildlife and Parks presenting the scientific information to the public, and then later on during the meeting, there will be the opportunity for folks to ask questions, receive answers from the panel. I will be moderating that meeting, trying to make sure that nobody gets too excited. We do know that this is an issue that people are very passionate about, and there are lots of opinions around this issue that are going to be voiced.
Drew, I appreciate you taking the time to join us today and sharing with us some information about the North American model for conservation, but then also baiting and feeding.
Thanks again for having me, Shelby. I always enjoy visiting with you.
That was Kansas State University wildlife specialist Drew Ricketts, and that meeting he was discussing is being hosted by the Kansas Department of Wildlife and Parks and K-State Research and Extension. It is the department's first informational forum on baiting and feeding wildlife. It will be taking place on September 21st from 6:30 to 8:30 p.m. on Kansas State University's Manhattan campus. It will take place in the Kansas State University's Leadership Studies building in the Town Hall room, which is room 114. If you'd like to learn more information about this forum, you can do so by going to ksoutdoors.com. Again, that is ksoutdoors.com. I will link that website as well as a news release with information about this forum in today's show notes, which as always you can find on agtoday.net. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.
This is Agriculture Today. Along with Shelby Varner, I'm Jeff Wickman. We end today's program with this week's milk lines. According to data from the Central Milk Marketing Administrator, dairy farmers in the Midwest region experienced growth in several areas over the last 5 years. K-State dairy specialist Mike Brouk takes a closer look at the findings and what it means for dairy farmers in the central part of the U.S. moving forward.
Today, I'd like to take my hat off to our dairy industry here in Kansas as well as actually in the Midwest. Recently, the Central Milk Marketing Administrator provided us with some data concerning milk production over the last 5 years and the changes that we have seen. One of the things that we have seen is that milk production here in the central part of the United States, basically from the Rocky Mountains going east through Ohio, we account for 45% of the total milk production in the United States in 2022. That's up almost 10% versus 2017. And I went back and looked at some of the records from past years, and back in 2010, the central part of the United States only accounted for about 41% of the total milk production in the United States. So hats off to you dairy farmers who work 24/7 to provide us with milk for our dairy products in the store and for the efforts that you guys have made in trying to increase production on your farm and increase the number of dairy cows, not only here in Kansas, but also in the Midwest region. So we are outgrowing the West, and for many years that was not the case. Been involved in this dairy industry for about 4 decades now, and when I first started in my dairy career, it was the western part of the United States that received a lot of credit for growth and development of the dairy industry. However, that has turned around, particularly in the last 2 decades, and even more so in the last decade as we've seen the growth in the Midwest continue to grow. So we look at where some of our various dairy products are produced here in the United States. Cheese is a major area for us here in the Midwest. About 48% of the total cheese production is in the Midwest versus about 40% out west. And in the last 5 years, our cheese production capacity here in the Midwest has grown by about 17%. And as we think about moving through the next 5 years or so with a new plant down in Dodge City, as well as some other plants that recently expanded. One at Hugoton, also here in Kansas, but there are other projects that will increase that cheese production in the next 5 years here in the central part of the United States. So not only is Kansas a dairy state and a dairy growth state, the Midwest is a growth area when it comes to dairy production. And I don't think this is going to change very much. Another area where we shine here in the Midwest is actually ice cream production. We just had National Ice Cream Day back in July, and here in the Midwest, we love our ice cream. 59% of all ice cream production is located here in the mid-center section of the country. So quite extensive, and it's growing a little bit, not as fast as our cheese production, but it is growing fairly quickly. Another area where we've seen significant growth in the last 5 years here in the Midwest or center section of the country is actually non-fat dried milk. That production has been growing fairly rapidly. We only produce about 21% of the non-fat dried milk, but we've been up about 15% in the last 5 years. So it is a fairly good growth area for us. We also continue to lead the nation, or at least regionally, in whey production. That would be associated with our cheese production, producing about 46% of the total whey produced in the United States. For all of you that like your protein drinks, many of those actually do contain a significant amount of whey. A lot of that whey is actually produced here in the center section of the United States. This is Mike Brouk with K-State Research and Extension, reminding our dairy farmers that not only is Kansas a leading dairy state, but you're also located in a leading dairy region of the United States.
Thanks, Mike. And that'll do it for this edition of Agriculture Today. For Shelby Varner, I'm Jeff Wickman. This is the K-State Radio Network.